Hello everybody, I'm John. This is Strategic Investing, and today of course we are going over Xtract One's earnings that we just got yesterday, and let me tell you, we have a lot to go over. We have phenomenal growth in both backlog and revenue, some great news about DHS moving forward, MSG buying some of the product, increasing production, and a lot more. So let's just jump right into it here. I'm going to get myself off the screen so you guys can see everything here. And I first just want to talk about the revenue and backlog growth. So right here, this first highlighted line, you can see the growth from Q1 to Q2. We have 1.87 million going now to 3.35 million. That's almost 80% growth quarter over quarter in backlog. And similarly in platform revenue here, again, I'm going to be focusing mostly on the platform. That's kind of the main focus of the business. That's the part of the business that management is focusing most on. That's the part that's growing. So that's what we're going to focus on here. So that said, platform revenue here also growing very significantly from 426,000 to now 721,000 in Q2. That is almost 70% growth quarter over quarter. To put that into perspective, guys, if they were to do that consistently for 1 year, that would equate to year-over-year growth of over 800%, okay? So while a lot of you guys might be looking at this and going, well, that's a pretty small number. They only grew revenue by 300,000 or so. If they can consistently do this, guys, we're going to be very soon seeing some really big numbers coming out of Xtract One in both backlog and revenue. And to get into that a little bit more, you guys might remember some of the math we did here in the last quarter. So in the last quarter's earnings call, we had Peter and Karen both talking about how they expected the growth from Q4 to Q1 to continue throughout fiscal 2023. And obviously that could mean two different things, right? They could be talking about the same dollar amount worth of growth, right? Increasing here, and that's kind of what we modeled out in this first section here. Similar dollar amount growths in both backlog, revenue, signed agreements pending throughout fiscal 2023. Or they could be talking about the same percentage growth, which is obviously more bullish, and that's what we modeled out here in the bottom section. Well, what we actually got is even better than that, because they actually took the same percentage growth and increased it. They made a higher percentage growth from Q1 to Q2 than they did from Q4 to Q1. So this is the actual numbers. These are the actual numbers that we got reported. You can see that they are significantly more than this, aside from this signed agreements pending. But I think we do have to look at some context here, because you could look at that and obviously say, well, it's possible that they had less inbound interest, or they grew inbound interest or signed agreements pending less. But you do have to consider the fact that in Q2 to Q1, they did significantly increase the rate at which they're pulling these signed agreements pending through into backlog and finalizing that. Obviously, you can see the increase from Q1 to Q2. They almost doubled the amount of backlog here. So they pulled a lot of this 4 million through into actual backlog. That's obviously going to decrease the rate at which this grows. So again, it would have been better to see this grow, but we do have to look at it through that context, because it's actually a little bit better than it looks from just this pure 4 million down to 3 million, okay? And so again, if we get back to this growth rate here, right, and this is what I was talking about with that 800% year over year growth, that if you annualize the growth that they're looking at right now, you can see from Q1 to Q4, this is Q4 fiscal 2023, right? It's only, 6 months away or so. If they're able to continue this growth rate, and then that's kind of what they're saying is they expect a similar growth rate. Remember, we kind of speculated, okay, is it similar dollar amount, right? Or is it similar percentage? Well, it's looking like percentage at this point. And this is, possibly what we could be looking at Q4 of 2023. Obviously, I'm not saying that that's what I think they're going to do. I'm just kind of doing the math here and extrapolating this out, and it looks pretty phenomenal. And the funny thing is they report these numbers, they almost double, they grow, backlog by almost 80%, they grow revenue by almost 70%. And Peter goes on the call, it could have been better. We had some, more contracts that we would have liked to sign, right? That's the attitude that you want from the guy leading the company. you want them to almost double revenue and backlog, and you want the CEO to be like, oh man, I could have done better. That is the attitude you want from the CEO, because that is what's going to produce these numbers like we're showing here potentially for Q4 of this year. And so that brings me to some of the other news that we got in the call that could really be fueling this potential growth that we might see going forward into the rest of this year. And the first thing is, Peter mentioned on the call that they actually are having to increase production, increase manufacturing of the smart gateway, of their product, to meet the demand that they're having. And if you guys remember, I think it was maybe 2 earnings calls ago, maybe even a webinar, that Peter got a question about whether or not they had enough manufacturing in place to meet their demand projections. And he did say, if I'm not mistaken, something to the effect that they had enough manufacturing in place to meet even their most bullish estimates for demand. Well, it seems as if they're exceeding even their most bullish estimates for demand. And we also, of course, got news that MSG, Madison Square Garden, is going to be purchasing the smart gateway. Now, we kind of assumed this was going to happen, but this, of course, is confirmation, and it looks like they will be deploying the smart gateway in Madison Square Garden, Radio City Music Hall, the Beacon Theater, the Chicago Theater, and the Sphere in Las Vegas. These are going to be huge venues for Xtract One for a variety of reasons. I talked about this in my previous video about this agreement, but this exposure that they're going to get from these venues, from their relationship with Madison Square Garden, I think is going to be huge. And I think they made a good case, both Peter and Karen. I agree that shareholders should vote for the second tranche, give that extra funding to the company, really be able to leverage that relationship with Madison Square Garden, because I think it's going to be very, very good for the company. And the next thing, of course, is we got a great update on the progress of DHS Safety Act. Peter mentioned that they've been going back and forth with the DHS, and based on a lot of the new data that Xtract One had been providing them, DHS actually recommended to Xtract One to reapply for a higher designation now with the new data. And this hopefully is going to really push forward the approval, really kind of speed up that process, hopefully, and now even get us a higher designation. This certification, once they obtain it, will very likely accelerate their sales significantly, because unfortunately, there's probably a lot of venues out there right now that the only thing standing in Xtract's way of getting approved to be in that venue, getting that contract, is this certification. And so once they're able to get that, that'll be kind of the last thing standing in their way. We'll probably see a really nice push, a really nice acceleration once they're able to get this approval. So that was great news that we got some progress on there, that now they're going for a higher certification. Now, the last couple things that I want to go over are some of these charts that I've put together, because I think these are really helpful in looking at Xtract One's earnings and looking at the progress. And the top line here, you can just see over the last few quarters, we've seen this really nice uptrend. This is platform backlog. Obviously, I talked about that growth rate. You can see if this kind of continues, what trajectory we're on here. Same thing with platform revenue, right? The last 4 quarters, really nice growth. Number of contracts, we didn't actually get that number. They're probably going to be updating the shareholder deck a little bit later on, maybe tomorrow. So I'll kind of add that one in there. Cash burn, of course, did decline. And remember, we were talking about getting to see exactly how low they got on cash. It looks like they got down to about $650,000 or so in cash. So pretty low. But we did see some really great cost cutting. We saw a lot of their expenses decline. And also, as I kind of suspected here, we did see that they were able to finally collect on this $1 million here of ITB funding. So that definitely helped them, allowed them to kind of make it through that quarter. And now that they've got the MSG deal, they have a good cash position, after the shareholder vote, an even better cash position. But again, we did see really nice cost cutting here. And to that point, this is really impressive here. If we look at platform revenue versus expenses, the revenue is increasing while expenses are decreasing. And revenue is increasing at a significant rate, right? We had about 60% growth Q4 to Q1. We had now 70% growth Q1 to Q2, and we still have revenue declining. You can see in this graph here, I have percentage growth for revenue versus percentage growth for expenses. you can see here the last 2 quarters we have declining expenses with increasing growth, right? That is impressive. That's really hard to do, especially at this stage in the growth of a company. So that shows really good management of spending. And that's kind of also what we see in this last chart here. This is basically revenue generated per dollar of expenses. And the way that I kind of measured expenses is all of their cash expenses, and I also included stock-based compensation. And you can see they've been increasing this very nicely over the last 4 quarters. And actually in the last quarter, they doubled from Q1 the revenue that they were able to generate per dollar of expenses. And so basically, if you look at this chart, this essentially is what we need to get to $1 in order to break even, in order to get to profitability, right? They need to generate at least $1 in revenue per dollar that they spend, and that would be break even. And then obviously they need to start generating more dollars of revenue per dollar of expenses, and then that will lead to profitability. So this here is a really good chart that shows exactly how well they're managing their cash and how efficient they're being even while growing at the rate that they're growing. So these charts here, these bottom 3 charts, in my opinion, are probably the most impressive thing that we're seeing from Xtract One right now. The ability to really manage that cash and in a low cash environment, be very judicious with how they're spending it, and still be able to grow at very significant rates. And that's kind of really my main take on these earnings. Just to kind of recap here, obviously very significant growth, very impressive growth in both platform revenue and backlog. We had obviously great news about Madison Square Garden buying the products. Good news as far as the progress of DHS approval. And again, this last point here, the fact that they're able to decrease their expenses while at the same time significantly growing revenue. This is putting the company on a really nice path for growth here, and I am excited to see what they do in the next quarter. I want to know, though, what you guys think of these earnings. Definitely leave that in the comments below. Of course, also leave any questions you have, and I will get to all of those. Other than that, I will see you guys next time, and have a great day.